Greetings and welcome to Patent Insider Secrets, Patent Insider Tidbits. We're here today to just give you some brief conversation about what's happening. Especially, we're reading some things today about tokenization and innovation, and we get a lot of questions a lot of times about blockchain, about tokenization, about cryptocurrencies and coins, using them for investment. Are they good avenues? Are they good things for entrepreneurs? And founders, and we want to take just give you our perspective, our take as a patent insider, and we'll do this pretty quickly. Give you some tidbits, and also at the end we do have a couple of announcements. Actually, we'll do this. Let's start off with the announcements, and then we'll get to the meat of it. So, for announcements for our local Maryland startups, if you are in Maryland, we have a tremendous opportunity for you coming up. So here in Maryland, we have Startup Grind Columbia chapter having a spring startup showcase. So for those not familiar, we get about between 10 and 20 companies to come and showcase their startup. Depending on the companies apply to pitch their startup to the investors that are present. So you can apply for that to be a part of the showcase, to have your startup, highlighted at the showcase, or set up a table and meet people at the showcase. The deadline for that is Friday, May 6th at midnight. So you have until Friday, May 6th to check that out. There's an opportunity in this community. There are over 200 plus entrepreneurship movers and shakers, candlestick makers, investors, and startups. So the spring showcase is a pretty big deal. There'll probably be a summer one too, but we want to make sure that you're there. This is not a pitch competition. The showcase allows you to just build relationships. And you can meet with potential investors that are there. This is one of the local events, and it'll be at the Maryland Innovation Center in Columbia, Maryland. So definitely check that out. The date for this is the 26th. So you definitely want to check that out. For the other announcement, if you're in Austin, Texas, we have Panoramic Ventures is having a startup showdown, Austin edition. The deadline to apply for that is Friday, May 6th at 11:59. So this is, if you're in Austin, Texas, you definitely want to check this out. You want to make sure that you apply for that. This is a huge, I think Startup Showdown is $100,000 chance to win $100,000. My numbers may be off, but check with Panoramic Ventures. The link is here. Go to startupshowdown.vc, startupshowdown.vc. Okay, those are our announcements. Now, the subject of the day. So the question that we asked, that we put forward, and that we're going to be answering in this conversation today is: does tokenization equal innovation? Does tokenization equal innovation? So when we look at tokenization, one of the things you get to do when you're in these spaces, as we are patent insiders, you get to meet a lot of brilliant people and be ahead of a lot of the technology and find out what's going on. And one of these people, two of my favorite people when it comes to tokenization and crypto, attorney Marie Murat and Samson Williams. They are really at the forefront in terms of understanding it. They teach at NYU and various universities about crypto, about blockchain, about understanding it. They understand the SEC crowdfunding regulations. So it really helps us kind of better understand. The reason I say that, because he posted something and I thought it was interesting. He said, if you digitized Enron stock, would it matter? Tokenization does not add value, does not by itself add value. So for those of you who don't know, Enron was, the Ponzi scheme before Madoff. Enron was a company, an energy company, and they were a hot investment, and people were getting these huge returns. But eventually those returns were detached from reality. The returns were based on it being a trendy investment. There was no intrinsic value. So when it finally, when everything hit the fan and it hit a moment, it didn't matter whether you had a digital token or a coin or it was the actual stock you were buying. The company wasn't worth anything. So you lost money on the investment because it wasn't a sound investment. The currency of the investment, whether it was paper stock or whether it's a digital token, both of them would have been valueless based on the performance of the actual asset, which is the company itself. So in response to that, this gentleman says, hey, but it could add more user interest. Lots of people got into equities via Robinhood because of design and access. Robinhood is an app to allow you to trade stocks. It started to lead the whole, what they call the Reddit revolution, Wall Street bets, and all that, the groups that pumped up GameStop, these other companies that hedge funds had shorted. And so he's saying that's a trend. It's a trend. It said, did you just say it's a great way to get more dumb money into scams? And I'm not necessarily going to say it's a scam. I would say that definitely is for Twitter. That makes a lot of sense. But what we want to say is that Web3 is awesome. Web3 is opening a window into new types of innovation. But right now, it's not free from fraudsters, posers, and scammers that will take your money. And as they say, a fool and their money will soon be separated. So as an innovator, I get it. But I think Samson says this all the time in our various conversations that, it's not hot sauce. I think we were talking in our last conversation, our webinar that we did together. Blockchain is not hot sauce. If you put blockchain on something, it doesn't make it new technology. You don't get a patent for adding blockchain to something that already exists. In the example given here of digitizing stock, a token is a digital construction that with blockchain is given a certain value or it can be tied to an individual and that can supposedly not be tampered with. It makes it very difficult to tamper with it. But its business model is where the intrinsic value is. Just the tokenization in and of itself does not do anything. It has to be representing a sound business model. There has to be intrinsic value in the product or service or company that it's representing. If there's no money there, it's just a digital asset. Might as well be a digital receipt. There's nothing that you can get from it. So tokenization is trendy. Tokenization is sexy. Tokenization is what all the cool kids are doing. But at the end of the day, if there's no intrinsic value, what do you have? So let me tell you a story. When I was a freshman at Morehouse College, the illustrious Morehouse College in Atlanta, Georgia, birthplace of Dr. King and Dr. Howard Thurman, all these great men, something happened my freshman year, and I never forget it. It was very insightful, and it has a lot to do with the world of business. A guy walked into my dorm room and said, hey, man, I just made $500. It was easy. I didn't have to do anything. It's easy. Okay, we're like, okay, so cool. Who wouldn't want $500? So what did you do? So basically, man, this is what happened. Everyone's doing it. Have you heard of whatever the name of it was? I forgot what the name of it was. I have no idea. But he said, have you ever heard of this? Basically, you get 4 people and they give you $100 each, and then you have to give $100 to the person that brought you in, and then basically you walk away with your, and I might have it wrong, but basically you had to give some money, and then get people to follow you into the program, and then they would give you money. You take their money, you exit, cash out. I just heard blah, 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 downline, blah, 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 upline, blah, 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 cash out, blah, blah, blah. You have to get 4 people. And, I was a math major. I was like, okay, so you were taking your $100, you're giving it to somebody, somebody's giving you $400. So you're just basically taking these people's money. There's no service, there's no, what are they buying from you? You're just sharing money. Okay, I don't understand. I'd seen the movie before. I wasn't going for it, but a lot of people did. Before long, all the cool kids were doing it. The whole campus was doing it, and it was a thing. And you know what? Before long, it crashed and burned. Some people got in trouble. Maybe got arrested. I don't really remember all those details, but I learned, because we had a school assembly, I learned about what's called a bogus pyramid scheme. Now we call it a Ponzi scheme. But a scheme where money changes hands, but there is no intrinsic value. There's no service. There's no product. It's just gifting of money under the guise that you'll make money. Now, for those of us who are naive to investment, I was very naive to investment at the time. Investment is risk. Investment, in a sense, is giving money on a promise that something is going to happen. And that oftentimes may not happen at the rate of return you want, and it may not happen at all. That's a risk. That's different than, because something's supposed to happen, there's a promise of something to happen, than just giving it and hoping that you get money back because somebody else is foolish enough to give money. That's a pyramid scheme. So we're not investment, and I'm saying that these coin creations is not a pyramid scheme. But You need to evaluate. You need to evaluate. Universal due diligence and business principles are universal. And what's the saying? Whether the pyramid scheme that I witnessed when I was a freshman at Morehouse, that would spread like wildfire around the campus. That same pressure, that FOMO, fear of missing out. That pressure can feel like you're being the last one. You got to do it. I got to get one of these NFTs. I got to get this. I got to get that. You want to make sure you're not the one holding the bag. And all you have to show for, you're giving up all your money. All you have to show for is the losses. I'm gonna say something else at the end, but I'm my heart. In my heart, I'm an innovator. I'm with we help people that innovate in this space. So I'm not against it. I just want you to understand that this is a new space. For some of you too young to remember the birth of the internet. The internet has not always been here. The communication, the guts, the back end of the internet was here. And it wasn't until the browsers were made appealing for the public in about the late 90s, mid to late 90s, when it became, something that was proliferating in the public. And most of us, we were in college, we or in high school, we used the internet, but our parents weren't using the internet. They got into email. Then email was a thing. But it took a while before the internet became something that was regulated and something that was that you could trust in. People wouldn't, to buy something online was like, you would really give your money on the internet? Like that was something that people wouldn't do at the time. So it got to a point where where certain things were put in place, you could trust things. That's why PayPal was such a big deal. PayPal was integrity in terms of paying with PayPal. That was something that was really big. So while you're excited about Web3, just know that and while it's a promising landscape for the future of innovation, it's not free of scammers, fraudsters, or posers, and they will take your in real life IRL money in hard cash and exchange it for NFTs or metaverse property that exists only in digital assets. And if you're aware of the risk, there's nothing wrong with that. But this is something that just saw tweeted today, and this is done tongue in cheek. Twitter, it's out there. I don't know if it's true, but it's a text message. Looks like one says, "My brother's about to learn a very valuable lesson about NFTs." It says, "Hey, my transaction failed. When do I get my money back?" So another one says, "I lost everything. It's all over. Never mind. The life of a crypto trader." So these are funny, but if you lose all your money, trust me, it's not funny. So when the trendy technology comes along, it's easy to feel FOMO and jump on the bandwagon. In fact, I have a couple of NFTs, but I didn't mortgage my future to get them. In fact, they're gifts. In the metaverse and in real life, sound business principles of how you vet them. So because the NFTs were gifted to me and they're free, they're probably not as valuable as some that people might have paid for. But the reality is the NFTs or the coins you paid for may not be as valuable as what you paid for them. In real life as well in the metaverse, sound business principles are universal. So you have to educate yourself. Learn the market, understand the risk, take a calculated risk, continue learning. That's all. That's all I wanted to share with you today. We hope this has added some value. Again, don't forget those 2 events that we mentioned earlier. The Startup Grind Columbia Spring Showcase is going to be, the deadline to enter your company or startup is going to be Friday at midnight, Friday, May 6th. If you're in Austin, Texas, Panoramic Ventures is having a startup showdown. Make sure that you fill out, I think you have until 11:59 May 6th, this Friday, to complete your entry. And I think that is a $100,000 prize. So with that, this is Patent Insider Secrets, Patent Insider Tidbits. Have a wonderful Wednesday.